Welcome everyone to the Kingston Properties Investor Briefing for the financial year ending December 31st, 2022. I'm Jermaine McDonald, CEO and coach for Learn Grow Invest Limited. It is my pleasure to be hosting this investor briefing here on our platform. So before we get started, I'd like to welcome Tatisha Rowe from Kingston Properties to open with a word of prayer.
Thank you, Jermaine. Let us pray. Lord, we thank you for this opportunity to discuss and present our financial results. We ask that you bless our day's proceedings. Lord, we ask that all will go well. Continue to bless us, our leaders, our team. Help us, Lord, to work diligently to accomplish our goals. Give us the strength to give us a vision. We ask that you touch the Learn, Grow, Invest team as well. Lord, we ask that you bless their endeavors and their goals, help them to accomplish and supersede them. Lord, we thank you for this our beautiful island. Continue to give us strength, Lord, as we go day by day. Bless us with unity, with strength, with peace. We ask for those who are mourning that you will comfort them, that you will heal those who are sick. And we pray for everyone who will be tuning in today or afterwards, Lord, that when they hear that it will open their understanding and they will get a better idea of our company and what we have to offer. Lord, we ask that you go with us, bless us, cover us. Thank you for all that you have done, all that you are doing, and all that you are about to do. In your name I pray. Amen.
Amen. Amen. Thank you very much, TR. And thank you again. Good afternoon, all. I'm Kevin Richards, CEO of Kingston Properties. And again, thank you, Jermaine and Ren, for the opportunity to allow us to share with the wide investing public, your audience, everybody, because I know you have a global reach, a little bit more about Kingston Properties. Usually around the time of the release of our audited financial statements, we'll have an investor briefing. The last three have been virtual, just as this. It'd be good to get back to in-person investor briefings at some point in the future. We want to talk about not just the financials of KP for this year, but we decided that this year we're going to do a little bit of a touch different and have more of a discussion around KP itself so that people understand what our culture is about, what the company is about, some of the things that we believe and stand by. And that's why we have with us today, and I'll introduce the team members, Henry Francis, who is our CFO. Henry joined the team in the midst of the pandemic, and he's been a tremendous addition to the team, and he'll be here to go through the financial highlights of KP this afternoon. And as well, someone who we consider as KP Foundation, the longest serving team member of KP, Mrs. Tatisha Rowe, who is our Senior Manager of Operations. She will give us the ESG report and talk a lot more about KP's culture and some of the things that we've been doing, particularly on the social and governance side. With that said, let's jump into it and let's talk a little bit more about KP. I'm sure most persons are familiar with KP. Last year, we had a year where we spoke a lot about the company itself, and we delved quite a bit into the history of the historical financial performance of the company. So just a little bit of refresher about who KP is, what it is that we do. We're a real estate investment company, and we specialize primarily in what we call value-add commercial property investments. And we operate in the industrial, office, multifamily, and mixed-use spaces. And we'll talk about the value-add proposition a little further in the presentation. But just some quick facts about 2022. We had another record year of financial performance, record rental revenue of $3.3 million, record net profit of $3.8 million, record cash generated from operations of $1.7 million, dividend yield, which was one of the highest among listed companies on the main market of the Jamaica Stock Exchange. And of course, we continue to grow our square foot under management or ownership to just a little bit over 500,000 square feet, which includes some development lands. One of the great things about 2022 as well is that we ended the year 100% occupied in all of our properties. The good thing about that is that although we We did some fundraising, as I mentioned earlier. We raised $1.55 billion, which exceeded our target. And another important factor, one of the objectives that we had why we went with the route of an additional public offering, is that we wanted to widen the ownership of KP. So we received 2,500 applications, and that has broadened the ownership of KP, which has led to more trading of the stock. We've now moved to a situation where average monthly trading volume is in excess of 1 million units. Now, we just spoke about our profits that we achieved, growth in rental revenue, etc., cash generated from operations. So despite having raised all of that money in an APO, we largely just paid down some of our debt. We're still yet to deploy most of the funds raised from that APO. We'll talk about that a little later. But the most that we did was pay down some of our debt. So we are now leveraged at about 22% of our total assets. What we did also during the year is that we paid record dividends. So with the proceeds of record profits, we've paid record dividends, and we paid out 1.4 million in dividends last year. Typically, every year we do an acquisition. Last year, we were primarily focused on fundraising and managing what's been happening generally in the macro environment, primarily on the interest rate side, which resulted in us paying down debt. But we did do one small acquisition in 2022, and it was for our participation in another Atlanta property. We acquired a stake in a 118-unit multifamily property in Atlanta with our partners Apex. So this became the second acquisition that we've done with Apex, and we hope to do more with them going forward. What we have done, and the simple value add model, you go in and you look at a distressed property, you go in, you make the improvements, and you change the tenant base, attracting new tenants who will pay higher rents. And so far, what we've seen is that the rental rates from these properties, both Polaris at Cam Creek, as well as this one, Polaris at East Point, both of them, we've seen rental rates themselves being higher than what was projected during the pro forma and underwriting exercise for this deal. Additionally, during the year, we did a lot of improvements on properties. The improvement in the properties, again, consistent with our value add strategy, is what allows us to attract tenants. So we did quite a bit of fairly extensive renovation at our East Ashenheim Road property. And again, that resulted in us in having the property fully tenanted by the year end. Additionally, we increased our staff complement by 50%. And this was with the addition of members to fill roles in investment management, finance, administration, and we also added a legal officer to the team. So let's talk a little bit about the portfolio itself. And I think most persons will be familiar with the portfolio, but it's important to give some historical context to the growth in the portfolio. And we looked at it from the last 7 years, and you'll notice that we've achieved fairly rapid growth in the portfolio from 2016 to 2022. Interestingly, when we started operations in 2008, we were roughly around $4 million, and we are now approximately approaching $60 million, which, interestingly, I was doing the math today and realized that's 15 times growth in 15 years, which I think is a remarkable achievement for our company. A lot of the growth also is stemmed from the shifting of our strategy over the years. In the past, we had a higher concentration, say, in the US market. That has been reduced significantly. And now they are sort of evenly split between Cayman Islands and Jamaica. A lot of the growth that you've seen, particularly in the Cayman Islands year over year, has largely been attributed to the increase in the value of some of the profits, some of the assets that we have in that market. Cayman, as I mentioned before, has grown significantly. It now represents 41% of the total portfolio, Jamaica at 48%, and the US shrunken to 11%. In terms of the split, in terms of a subclass, you'd see the office sector comprising 45% of the portfolio. Industrial and warehouse subclass represents 43% of the portfolio, and 9% is in residential space and a small bit in retail. Largely, the property portfolio is, Harbour Centre remains the largest property in the portfolio itself, and that is rounded out by our 3 Jamaican assets: the Red Hills Road property, the East Ashland Road property, and our flagship property here at Red Hills Road, Grenada Crescent, East Ashland, Red Hills Road. So let's talk a little bit about our value add strategy. It's a term we've been using quite frequently. And essentially what we do is we go in and we acquire an asset which is on the market. It's undervalued from a market price standpoint. We see opportunities of how we could make improvements to the property to attract new tenants and increase the rents. We've had a very successful case in the 2 properties that we acquired in the height of the pandemic. We bought 2 properties, one a warehouse property on East Ashland Road in Jamaica, and an office building in the Cayman Islands called Harbour Centre. Since acquisition, the East Ashland Road property has appreciated in value by 22%, while the Harbour Centre property in the Cayman Islands has appreciated by 18%. When we looked at it from a return basis, on an unlevered basis, the return on the East Ashland Road property was about 14%. And remember, this is all in US dollars. So when you're looking at these returns, you'd have to compare them to the returns you'd normally get on a US dollar investment. So 14% unlevered return IRR on the East Ashland Road property and 10.7% unlevered on the Cayman property. We did take leverage in the acquisition of the Harbour Centre property. So on a levered basis, the IRR for the Harbour Centre acquisition was 22.5%. Those, I think, are significant returns in US dollar terms for any acquisition. Now I'm gonna hand over to Mrs. Rowe, who will give us the highlights from our ESG report.
Thank you, Mr. Richards. So before I go into the ESG highlights, I will be giving a brief overview of our company and the people behind our success. Kingston Properties was incorporated in April 2008. So this year we are celebrating our 15th anniversary, and we are proud to be trailblazers in the space, being the first REIT to be listed on the Jamaica Stock Exchange. Over the years, we've been able to grow consistently in our assets and our portfolio. We have created shareholder value consistently. We've maintained strong community partnerships, and we have been very deliberate about our sustainable business operation practices, our KP Going Green initiative, which I will go into our ESG. We've remained true to our mission, which is to generate extraordinary returns for our shareholders through our core business, which is the acquisition, the development, leasing, and the management of real estate. And this is done, of course, by our talented and committed team in a socially and environmentally responsible way. Our vision to be readily recognized as the pioneering REIT in the Caribbean, known for creating exceptional and sustainable value for our stakeholders. And these are hinged, of course, on our core principles of integrity, accountability, to be results-driven, and innovation. Our team, of course, the people who have helped us to be so successful over the years, it is imperative that we highlight them, because without our team, we would not have the success that we have to report here today. So we have in-house strong policies, including our sexual harassment policies, occupational health and safety. We also have a fair opportunity and employment policy for all. We're supportive, respectful, family and fun and goal-oriented. It is important that we build a team that is talented, committed, and a performing team. But in order to do this, of course, we need to be properly resourced with the tools that they need to carry out their daily functions. And so we are big on work-life balance, especially in these very challenging times. It's important that we're not only focusing on profit, but we're focusing on our people. And so we have been investing in our people. Each member is required to do at least one training session per year. We also, as part of our work-life balance, We have fun activities that we engage in. We encourage persons to take their vacation leaves and be on vacation. We also have implemented our flexible work hybrid program. So persons are able to work a number of days per month remotely. Um, Very important for us last year, we we launched our green policy as we are committed to protecting the environment and improving stakeholder value by conducting our operations and activities in an environmentally responsible and sustainable manner. We ensure that we comply with the mandatory requirements, conduct our activities, and operate our facilities within the applicable environmental laws and regulations. We conserve on energy and natural resources. We recycle, and we of course partner with customers and suppliers that are committed to going green, because this is an initiative that is so important to us. We can't do it alone. We need other stakeholders on board to help us to protect the environment and to operate in a sustainable way. Very important for us. Last year, we were able to get 3 of our local properties green certified. We received a silver status through NEPA's Green Business Jamaica program. We're very proud of this accomplishment. We set out to accomplish it, and we were able to meet that goal. We ensure that we engage in water conservation methods, energy efficiency programs. We installed our VRF system. We replaced conventional AC systems with inverter systems. We also planted trees because that is important as part of our environmental thrust. And we not only see where we're protecting the environment, but we've also been reaping the rewards in terms of savings, as the VRF installation resulted in a 30% reduction in energy consumption. So this benefits us and it benefits our tenants as well. This year, we're going for gold, so we will be implementing some major projects as well, including our solar project with rainwater harvesting. It's an annual assessment, so we have to ensure that we're not only maintaining what was implemented last year, but also we're building on that. Giving back to the community is also important for us. We support the communities, in which we operate, with a focus on youth development and, of course, the environment. Last year, we donated over $700,000 to these groups and organizations to support their lunch programs, their summer school programs, their community sporting events. We gave laptops and supplies and furniture. The need is great, so we continue to ensure that this is a partnership that we maintain. And of course, going forward, we'll always be increasing our donations and looking at other areas in which we can serve, because our youth, they're the future. And of course, the environment is dear to us, and we have to ensure that we preserve what is left of it. On our governance front, we've maintained strong governance structure. We currently have 7 independent directors, 4 board committees with our annual evaluation and training, just to ensure that our directors are au fait with what the current governance systems are. We've adopted the PSOJ Code on Corporate Governance to strengthen our structure and accountability framework. This includes our conflicts of interest and our whistleblower policies in keeping with global best practices. We've also been ranked BB with a score of 78.6 on the Jamaica Stock Exchange Corporate Governance Index. Of the 90 companies that participated, the average rating is actually a CC. So we're actually doing better than most companies. And of course, we are aiming to get the AA score. Communication, key for us. Deliberate, consistent communication with all stakeholders. We have a dedicated investor relations officer, of course, to ensure that all queries and issues are dealt with in a timely manner, because this is important for our business to operate effectively and efficiently. So that's basically the overview. I will now hand over to Mr. Andrew Francis, who is our CFO, and he will be going into our financial highlights for the year.
Good afternoon, everyone, and thank you, Tatisha, for that. as she mentioned, I'm going to be taking you through the main financial highlights for 2022, and just to give you a bit of context in terms of a comparative with the previous year, 2021, just to show you how well we are performing. So 2022 has been another strong year for KP. In our operating profit, we have seen an 11% growth in operating revenues for 2022, at $3.5 million compared to $3.1 million in 2021. And this has been pretty much driven by the solid asset base that we have created over the years. Our most recent and two of the largest acquisitions that we've made to date being East Ashanine Road in Jamaica and the Harbour Center in the Cayman Islands have both done well in 2022 from an earnings standpoint. And we've also had our 232A Spanish Town Road property doing significantly well for us in 2022. And those are some of the main assets that drove the strong performance that we're showing in 2022. This translates to our operating results before other income, and we'll see there a growth of 8% compared to prior year. It shows a stellar management of our operating expenses, which means the growth in our operating revenue is being transmitted to the net income line. Right? Now, during 2022, KP continued to build a strong and resilient source of income, and we're building that not just through diversification across region, but also in diversification across the sources. So between 2020 and 2022, you've seen a consistent growth in our operating, our traditional operating income or rental income, growing from 2.1 million in 2020 to up to 3.5 million in 2022. But thanks to our application of the value add strategy, which the CEO spoke to earlier, you're seeing where we are showing significant appreciation in the asset values as well. Our East Ashanine property and our Harbour Center property appreciated significantly during 2022 by $2.2 million. I mean, we've also building a strong other source of income and ensuring that we're pretty much maximizing the earning potential on each of our properties. So we also have other income of about $0.3 million year on year, right? And this growth in our operating income has translated into just the general growth in our business. And if you look at our rental income over the last 5 years, the compounded annual growth rate is 16%. And again, this has translated into annual growth rate of 27% when we look at net operating income. The transition from growing or operating revenue and converting that to the bottom line speaks for itself when we look at expense management. Our operating profit for 2022, $4.4 million, a growth of 24% over prior year. Again, this is when we take into consideration or appreciation on the asset values. And during 2022, we've seen a rise in our finance costs by about 17% to $674,000. 2022 was a year of high interest rates. Finance costs had the potential of rising, but or skillful management of our financial position would have mitigated the impact of these rising finance costs. So even though we had a growth in our finance costs, we see where we're still able to generate a 26% growth in our net profit, up to 3.8 million from the 3 million in the prior year, right? And this has translated into the earnings to our investors. When we look at our earnings per share, in 2022, that has grown to $0.0049 US dollars per share, and our return on weighted average equity has grown to 9.8%. And this is in context of the growth in our equity base due to the APO, which was concluded during 2022. Right, just a couple of key ratios, which I know a lot of persons would be interested in seeing as to how we are managing the operations. Our net operating margin is a pretty healthy net NOI of 57% during 2022, and our EBITDA margin has grown to 126%. Our rental income as a percentage of total investment property continues to be strong at 8%, and a similar thing for our operating expenses as a percentage of rental income at 44%. Another strong indicator would have been our dividend payout ratio. This year we've done 118% of our FFO as a dividend as a percentage of our FFO, showing the strong or actual delivery of this value to our shareholders. Just to turn a bit to our financial position at December 31, we see we have pretty much grown our investment portfolio under management to $50.7 million as at the end of 2022 versus $47 million. And this is driven by the growth in the value of our investments in Jamaica and Cayman, but we've also added the additional investments in the US market in the terms of our partnership deals with Polaris at East Point. And this has basically translated into a growth in our total asset base, our total asset under management to $56.2 million, up from $50 million last year. So that's an 11% increase, which has been spearheaded by the APO, which we completed, and we continue to deploy those funds for the benefit. Our total equity base grew to $44.6 million. That's up 7%, again driven by our APO during this year, and in addition to our strong operating results. So that drove the growth in our total equity. But significantly, we've also reduced our total debt from 17.2 million to 11 million at the end of 2022. It's a 30% reduction. So as part of our management of finance costs, we've paid down some of the high interest rate debt. We've also refinanced and renegotiated terms on some of our variable rate debt just to stabilize or interest expense and manage the risk in the global market where we see rising interest, particularly in the US and other parts, right? So in terms of our book value per share, we've seen where that has grown to $0.05 US dollars per share. And our total loan as a percentage of investment property has fallen to 22%, as the CEO has indicated previously. Our total loans to asset has also fallen to 20% in 2022, and our debt to equity has fallen to 25%. So on a financial position standpoint, the company is a very strong balance sheet with the potential to do quite a bit more. Just a look at how the market has reacted in terms of our price or price per share over the 5-year period. We typically trade on the market above our book value. We see our trend line for the market price pretty much above book value over the years since 2018. We're currently trading at 7.04 up to last Friday, which is slightly below book of 7.73. But typically that shows you that we still have a strong stock price, which has the potential to grow even further. Right, and we'll look at another slide that explains that a bit more later. So, and in conjunction with the growth in our share price, we've also seen where we have been delivering consistently good dividends to our shareholders, and we consistently grow that over the last 5 years. So we're at $1.4 million in dividend payout during 2022. Compared to $0.8 million in 2021. So we continue to grow. That dividend payment grew by about 75% over prior year. Right? So one of the metrics that we like to look at in KP is just a comparison of how we're doing when we look at comparable public REITs in the US. And we still like to pride ourselves in how well we are doing when we compare ourselves in that sphere. Just some of the key metrics where we are really dominant, and we look at our debt to equity position. Kingston Properties at 25%, much less leverage and operating at a less risky position than some of our counterparts in the US. We look at our return on average equity over the year. We see that at 9.8%, being favorable to our US counterparts, and our return on average assets at 7.06. Price to FFO is slightly unfavorable to the US markets. But when you take the total business in perspective and look at our PE ratio compared to the US market, we are at 10.4 compared to the US REITs, pretty much at 21.8. We also continue to do well on a dividend yield basis, 3.79. Slightly below the average in the US, but we continue to do a good showing and is one of the top dividend paying companies within the JSE, as many of you would already know. So that's just a synopsis of how well we did in 2022. And I just want to turn over back to our CEO to take a look at the strategy and the outlook for 2023 and beyond. So Kevin.
Thanks a lot, Henry. I think having looked at the numbers, and it is important for us to talk, okay, where are we going next? What is KP likely to be seeing and doing for 2023 and beyond? But to begin that conversation, we kind of have to look at what is the macroeconomic scenario. What we're seeing now is high interest rates relative to 2020, 2021. And the expectation is that interest rates will continue to rise, maybe another round of increases or maybe 2 more increases, still not sure. And it's important to note that I included Jerome Powell in this slide because most of our borrowing costs are linked to any Fed action. Our borrowing in Cayman, for example, is linked to US prime. Borrowings locally also, because we primarily borrow in US dollars. So whatever happens in terms of US Fed funds rates, that will have an impact on how high interest rates would be going forward. What we see in the current environment is that inflation, although moderating somewhat, is still relatively high compared to where the Fed is targeting. And they're hoping that at some point they'll create a weaker economy to bring prices back down towards their target rate. We could go into a long debate as to whether that's appropriate or whether they should look at changing what their target rate is, but that is a discussion for another forum. What we do sense, though, from a lot of our partners is that they anticipate that rates in the medium to longer term will fall off. Some think as soon as the fourth quarter of 2023. And you can see that when you look at how, say, the 2-year Treasury is trading vis-a-vis the 10-year, 5-year, or the 10-year Treasury. You can see that there is an expectation that interest rates going forward will moderate. One of the things that does is that when you're in this kind of environment, it creates more distress, and more distressed properties are the types of assets that we like, particularly here at KP. We've spoken about the value add proposition. Whenever you have a rise in distressed properties, that bolsters our deal pipeline. One of the reasons why we think that we could have a very good year going forward is that once rates remain high, then persons delay their purchases. So mortgages don't happen, and that fuels into the rental market. So this is going to continue to make residential rental properties strong. What we're seeing is a number of office spaces being converted for residential purpose. So the office to resi conversion, there is a surge in that is taking place. And even when we acquire properties, we always look at the property and say, is there an alternate use for this particular property? A case in point is the Harbor Center building in Cayman Islands. It currently is operating as an office building. It's 100% tenanted. We don't really see any threat to those tenancies going forward. But, if the market shifts, that's a property that can easily be converted to residential purposes, and it is right on the water, so it would be very attractive for that purpose. Other things too is that the office we see has been revolutionized. More and more persons are looking at office as a space. A lot of landlords are looking, and even some of the companies are looking at how they can encourage more persons to get back into the office. So that's what we talk about when we talk about revolution of the offices, that it's no longer the same desk and chair sort of thing. People are looking at creating fun spaces in offices just to get people back into the office. So we don't believe that offices will entirely disappear. It's just that it has revolved into something else. We still see continued, stable demand for warehousing and self-storage spaces. And, what is quite very popular in Jamaica is the need for multi-purpose properties, those that have a combination of warehouse, retail, office, that sort of thing. And we'll talk a little bit more about a project that we're doing going forward. And again, sustainability is very important. So people are looking at more of, occupying spaces that have a sustainable element to them, both whether it's for residential or for work. So what are our main strategic imperatives going forward? For us, we're going to be looking at monetizing more of the assets in our portfolio. We've basically had a more static approach to asset management, but we're moving to a more dynamic asset management strategy going forward in 2023. And if you look at our financials, you'd see that there are some assets that are, listed for sale. We're focusing, as we have always done, on the generation of immediate cash flow in any of the deals that we look at. And we're particularly looking at deals that will generate a double-digit cash-on-cash return at inception. Those are some of the things that help us to weed out some of the deals that are in our pipeline. We're going to continue. We say it every year, and we have been doing it. We saw it in the chart, previous slides before. we will continue to widen our geographic dispersion. And we're particularly focusing our energies and focus to areas outside of the hurricane belt. This areas, Jamaica, Cayman, DR, Puerto Rico, Florida, these are all susceptible to natural disasters, particularly hurricanes. And we want to diversify our holdings more outside of that belt. So we're looking at going into other markets, and we'll make some announcements later on in the year. We're also going to continue to bolster the growth in our portfolio. As Henri mentioned earlier, we are about 22% leveraged. So we do have the capacity to lever up. And once we lever up, we can move our assets under management from the 56 million that we had at the end of December 2022 towards as much as 75 million by the end of this year. And of course, once we continue to do that and to do well, we will continue to pay dividends consistently and try and make them as competitive as possible so that our shareholders are happy. So more importantly, as I mentioned before, we do have some cash. We raised 1.55 billion in our APO last year. A portion of it we used to pay down debt, but we still have cash resources of 4.7 million. And again, we do have the capacity to lever up by another 13 million. So 13 to 15 million dollars. So we could spend anywhere between 18 and 20 million dollars in new deals to generate more profits for our shareholders. We currently have the Gumtree 5 mixed-use development in Cayman, which is nearing completion, but already we have secured tenancy by a government tenant. There is the Rousseau Road commercial project, which I'll talk about shortly. We hope to break ground on that by June of this year. And we're also looking at other sites for possibly more mini warehouse projects, both in Jamaica and in the Cayman Islands. So let's talk about the Rousseau Road project. This is a site that we're going to be developing and constructing 14 units, 14 small bay warehouse units. This is being done as a joint venture with a reputable construction partner, Railmark Construction Company. And we're currently in working drawing phase. Hopefully we'll be able to submit for approvals in short order, break ground by June, and complete by March 2024. Already there's quite a bit of interest that has been generated in this project. We're yet to decide whether we're going to keep the units for rental or we'll look at sales. And at this point, I will hand it back over to Jermaine, and we'll do our Q&A section.
All right, great. Thank you so much, Kevin and team. Great highlights, great overview of everything that has been going on. We do have a few questions, so we'll jump right into those. And I'll ask that our producer will bring on the other members of the KP team as well, just in case there are questions for them. So with all that's going on in Guyana, is KPREIT looking at that market?
3 years ago, I think during the height of the pandemic, there were some opportunities that we were looking at in Guyana. We have looked at opportunities in Guyana, but we have not been able to strike on a deal there yet.
Okay. Next question from Ian Williams. How does this high interest rate environment affect the operations?
As most businesses, we are not immune to facing those high interest rates, but we are managing that on a number of fronts. So we look at how we structure new debt financing. We look at our current portfolio of debt, and as I said, we've paid down some of our high interest rate debt. We've converted some of our variable rate debt to more fixed rate debt and renegotiate terms and so on. So we are navigating that and watching the market. As you say, we expect some amount of taper off probably about fourth quarter of next year in terms of this year in terms of how the interest rates are going. But we continue to monitor that on our new deals and continue to look at the current portfolio in terms of adjustments that we can make.
Okay. Next question from Javon. What strategies are you using to get your name out there? Still a young company, and although you are in several markets, it's possible there needs to be more work in putting the name out there.
Well, this is why we're doing things such as this. Young is relative. I mean, we have been in the business. We've been listed on the exchange for 15 years. And as Tatisha had mentioned earlier, we are the first pure real estate investing company listed on the exchange. So we've been at this for a while. The good thing about KP is that we have a track record. So we have been doing real estate investment for a long time. We know where the pitfalls are, so we try and avoid them. So we will continue to do more of these kind of forums. And one of the things too about KP is that we're very transparent. We've had discussions sometimes at audit committee meeting where there are people who wonder why is there they applaud us for being very transparent and for presenting a lot of information. When you compare our reports to other listed companies, a lot of them don't provide the level of details that we do. So we're very, very transparent. I think that tells you a little bit more about KP. But yeah, I mean, again, the only other way I can think of is that we continue to do more of these kinds of forums, which we've done. And I think we have a very active social media. I don't know what else. I'd be happy to hear some strategies from you.
Yeah. Yes, I agree, Javon. If there's anything that you think the team can do, let us know. We're definitely open to hearing those things. And Learn Grow Invest is always available for any opportunity to work with KP. So Nicole is asking, what's the reasoning behind the reduction of the portfolio in the US?
Largely, we had adopted a very successful strategy of buying into condos. Again, remember we talked about looking at distressed markets. Back in 2010, which was right after the Great Recession, property values in Florida had fallen significantly. We were bold enough to go in and acquire 19 units in a condo property called the Loft 2. We acquired quite a bit of assets there. But, like every market, they go through cycles. So we bought at the low, prices went up, and we disposed of those assets. What we also found is that there is significant volatility in condo prices. So we've exited the condo strategy itself. And what we're doing is that we still think that the US is the largest and most important economy, and I don't see that changing anytime soon. So we are continuing to look at new investments in the US. But the type of those investments are mainly going to be more in the multifamily space as opposed to acquiring individual condo units. And you've seen that with our acquisitions in Georgia with our partner, Apex.
Okay. And I would recommend for Nicole that you check out the interview we had with Kevin a few months back, where we dug deep into the strategy in the US and what some of the plans are and the opportunities that KP sees in that space. Next question from Lansdale. Is management of the mind to extend the share buyback scheme?
Yeah, it's ongoing. And we've been doing share buybacks since 2014, I believe. Last year, we bought back a little over 600,000 shares, and it's ongoing. So we will be continuing the share buyback program.
Great. Fenicky is asking, for the Relmac partnership, what type of construction will be done? Block and steel or cast in place?
We're going with both block and steel, and let me see if I get the term right. It is you're throwing construction terms at me, but yeah, it is going to be block and steel and reinforced concrete. Yes, there we go.
Okay. All right. Next question from our community. How will the funds that you raised in the recent APO be deployed? Since you mentioned you've used some of it to pay off debt, but it sounds like there's still maybe a large portion of it remaining. How will those funds be used?
Yeah, one of the things that we decided that, there was no rush. We saw what was happening in the markets. Interest rates are going up. Some real estate prices were moderating. So there was really no rush to deploy the funds. We know that when distressed assets come, we will be in cash because you get the best deals when we can buy them in cash. Case in point, the two acquisitions we made in the midst of the pandemic, which is the East Ashenheim Road property as well as the Harbour Center property, we were able to secure those assets because we had strength of cash. And I think those now that we have cash, we're able to cherry pick deals and go after the best deals that give us those double-digit cash on cash returns that we're talking about. So we continue to review the pipeline of deals, and we're very, very fastidious. We're not going to just take a deal just for a deal's sake. It has to check all of the boxes before we proceed. But
Okay.
we anticipate that we'll make some acquisitions this year.
So I was actually just
yeah,
going
I'm
to ask. Go ahead.
Go ahead. Oh no, I was just going to add that the timing is a big factor. It's a timing game where you have to be able to have the funds ready to be able to acquire those assets, because otherwise an opportunity will come and you're not able to take advantage of it. So just having that cash base in place, as Kevin says, will allow us to take care of those opportunities as they will come. They will come. So there's just a timing.
I wanted to double click on, thank you, Andre. I wanted to double click on what Kevin said about the deal checking all the boxes. What are some of those boxes that you look for to be checked?
Yeah, critically, we look at, as I mentioned in this presentation, the immediate cash on cash return. We look at obviously net yield. You're looking at a scenario where we tend to target deals that are at least 200 basis points above our cost of borrowings, and we know where interest rates are. So obviously, we'll have to be looking at higher cap rates now for our deals. As well, we look at the prospect for the kind of capital appreciation or appreciation in the value of the property over a 2-year span, which is above 15 to 20%. We've generated that from the last two deals as we shown in the example. But those are the key metrics that we look at. Again, we also look at the diversification factor, which is a sort of qualitative more than a quantitative type of metric. Again, we want to diversify more outside of the hurricane belt. So we're going to be looking at deals in new markets.
Okay, thank you. So next question is, how often do you pay dividends?
Twice annually.
Yes.
Okay. All right. So Javon is adding further to his comment before, ads on social media as well as mainstream media, and partnering with other stakeholders in the public and private sector as some of the options as things for you to consider.
Okay. All right. Noted.
Okay. All right. Next question from our community. What's your policy around rental rate increases? How do you determine when to increase your rental fees?
Mrs. Rowe, that's you.
Okay, so typically in our leases, we have annual increases in them. So when they come up for renewal, of course, we look at the market to see where the comparables are at, and then we'll have our negotiations and we'll increase accordingly. But the leases have annual increases.
Okay. Question from Neville Graham. What of company acquisitions as different from distressed assets? What is on the horizon?
We have an extensive deal pipeline, and we continue to monitor the deals in the pipeline. Acquisition of companies is actually one of the things that we're looking at as well.
So when you use the phrase extensive deal pipeline, I'm curious, is there anything that you can share? When might we hear something being
It's a
reported.
little it's a little difficult to share much information because either we are in delicate stages of negotiations or some of the parties would rather not have that kind of discussion out in the public domain just yet. But within a month or two we'll be able to make some announcements.
I was just about to ask for a timeline.
How about that for breaking news, Neville?
Yes. Great. Thank you. Next question is, okay. All right. So I think we do not have any more questions. Let me just do a quick check here. Okay, great. So that was our final question for now. I believe we have some closing remarks from you, Kevin.
Yeah. I believe that the bigger question people keep asking, why would one buy into KP? Why KP? I mean,
Yes.
we think that our proposition is that we're offering you ownership in a diversified portfolio of real estate assets that is spread across multiple jurisdictions. You have above better than average dividend payout ratio. You've seen that in the presentation earlier, and our dividend yield is fairly competitive when you look at other listed companies on the Jamaica Stock Exchange. And we're not too far off when we look at the composite of US REITs as well. We have a track record. I've been saying this over and over. This year is our 15th anniversary. You note that in our logo. So we have a track record of this, which allows us to find the right deals and to generate the kinds of returns that have been very good over the years. And we do this through solid tenancies. We're a US dollar earning company, so you provide that kind of hedge to an investor. And another thing that's very dear to our hearts is that we are focused on sustainability and good governance practices, which is why we are very transparent in a lot of what we do. You read our reports, we tend to go into a lot more details than, many expect us to do, but it is our role as being good practitioners of good governance practices. So that, I think, sums up YKP. And I want to
Yes,
say
thank
again,
you.
thank you, Jermaine and Renee, for the opportunity to present to your wider audience. I know you have quite a bit of reach, and we really appreciate the work we've been doing over the years. You've been a very big supporter of KP, and we really appreciate all of the support that we've gotten from the Learn, Grow, and Invest community in total over the years. I hope to continue doing more of these going forward, taking Javon's suggestion.
Yes, you're very welcome. It is our pleasure. We do admire, same things that you mentioned, the transparency, the completeness of information, the willingness to put yourself out there. I think at this point we've done more more interviews or sessions with KP than any other company. So that's definitely a testament to your willingness to make yourself visible and to engage with our community and your investors. So congratulations to the team. I look forward to those updates that were mentioned. We'll be tracking them closely, and I know we'll be speaking again in a forum like this very soon. So I'll ask
Yeah.
you to, I'm not sure if each person may have any final comments or remarks that they'd like to share. I could give you the spotlight to say that now.
No, just thanking the community again. I just joined with our CEO to say thank you for the opportunity to share with the community. And I mean, we look forward to continue delivering strong financial performances for our stakeholders. And you can look out for big things coming in 2023 and beyond.
Exciting things.
Exciting.
Sure. And I just want to join in as well and say thank you. Thank you for this platform. Thank you to your community and for the questions. As we have said many times, we're transparent, we're open. So if you have any questions after this, feel free to contact us via telephone or email or social media pages. We're very responsive. So feel free to reach out. And thank you again. All the best.
Thank you. So Kevin, I'll give you 30 seconds, any final words that you'd like to say to our participants or persons who may be watching this later on?
Yeah, I mean, thank you again for the support that we've gotten from the market, because, the good thing about a trade, there are two sides to stock trades. There's a buy and there's a sell. So there are persons on the buy side, and I want to applaud the persons who've been actively buying the stock, both retail and institutions, because they clearly see the value in the company that continues. And we want to continue to create more value for shareholders. And we promise you that we will be continuing that round and look out for some exciting announcements in short order.
I like the tease. I like the tease, but I'm definitely 2 months, 60 days from now, I'll definitely be sending you a message
Could be
if
sooner.
we don't see an announcement before that. Okay, great.
Yeah.
Right. So thank you so much, Kevin and team. Great presentation, great insights. We look forward to all the things that you've mentioned. Congratulations on all your success. I want to thank everyone who has been here with us, posting your questions, giving us your support in terms of participating actively in this session. If you do have any questions, feel free to leave them under the video, post them in one of our community groups, or just send them via email and we'll forward them to the KP team. Thank you so much for watching. We'll see you in the next review.
All right.